Hello, everyone. This is Mark Leibovit of the Leibovit VR newsletters, and also the publisher of the Leibovit VR Gold Letter. Leibovit VR Gold Letter will not be published between December 15th and early January, right after New Year's. We're taking a break here. So no bulletins, no videos between December 15th and let's call it January 2nd or 3rd. Meanwhile, let's go dig in here into the markets, and let's first look at oil, which has been, a hot topic here in recent weeks. And what you're looking at on the screen is the OIL, which is the ETN for crude oil futures. And as you can see here, it's taken a bit of a nosedive from the mid-20s all the way down to about 15. Well under the 50-day moving average, which is the blue line, well under the green line, which is the 200-day moving average, well oversold. Anytime you get too far away from these averages, you generally get what is known as a reversion to the mean. In other words, back toward those averages. So the big decline here is presenting a big buying opportunity. We don't have the upside volume confirmation yet. I think T. Boone Pickens came out over the weekend and suggested you could see crude oil back over $100 or even higher in the next 12 to 18 months, and I wouldn't disagree. We've seen big shakeouts before. We saw the big shakeout in 2007 from $140 a barrel down to $40, and looks what happened. It came back. Of course, you had to wait a little bit, but the kind of returns you get here where you can double your money is better than the 0.25% in the bank. So this is a look at the OIL, a little blowing up here a little bit. We did get some negative volume before it came down, as you can see. So I like to, that's those little red arrows on the screen. That's my volume reversals. But if we get some positive here, some green arrows, that would make me feel a lot better about that possibility. Let's look at some names like Transocean Offshore, RIG. Really took this stock down here. Let's see just how much. Basically, let's blow it up here. I mean, way back. I mean, the stock was a $90 stock back in the 2007-2008 area, 60, 60. So recently, even in the mid-50s before it took this slide. Stochastic seems to be bottoming out, waiting for some upside volume, but this is a bargain down here, and whether you buy at 18 and have to buy more at 14 is irrelevant when it's back at $40 or $50 a year or so later. So we're keeping a close eye on it here as a potential trade. Let's look at some other situations. The gun stocks, Smith & Wesson, SWHC. This came down here, negative volume, as you can see, dropped from the 17-18 area all the way down to $9, and suddenly guns are not needed anymore. Well, that's not the case, and with all the civil unrest in this country, I'm sure there's going to be plenty of guns that are going to be needed going forward. Hate to say that, but that's the case. But even so, stocks oversold here, showing a little basing action. I think they came out with some earnings this week, which were, not real disappointing. They had some slow in sales, so but it's still basing out and has a technical bounce number here back toward $12. So looking really interesting to me, the fact it's dropped this much. Another stock in the same sector, which is on our list, is Sturm Ruger, RGR. Stock was down from 88 to the mid-30s, down 50 points. That's a big bargain as far as I'm concerned in the stock. No upside volume yet. Could bounce into the mid-40s just on a technical rally, but momentum seems to be improving here, so there's another one to watch out for a possible trade. What about Taser? It's not on our list, but we're going to add it. Big, strong move here. Look at this stock. Basically, Jim Cramer had it on CNBC, I think here. This is a weekly chart. It was back in September, and I was waiting for a pullback to around 13 area, and sure enough, that's what happened. It took off into the 20s. Looks like it's headed to about 30. When you think about it, with all the civil unrest and all the nonsense out there about what's going on in Missouri and other places, I just think it's a bunch of agitators, just trying to create a problem, and we'll get into the politics another time. But in any event, I think people are going to be more inclined, I think, to buy tasers than guns, or at least tasers will do as well. So this is probably, a good play, except it's extended. So if you get a little bit of a pullback here, this is certainly one to keep an eye on. So let's look at the gold market, which I know we're all interested in. More or less has held pretty well here. I mean, we had a low here back in early November, around 11:30, 11:40 or so in the spot market, and it's been trying to improve here Looks okay to me. I just think it's a lot of bad news. I think world governments are printing like crazy. The most recent volume's a little positive, but until we really get a breakout above this 50-week moving average here and the 200-week moving average, this blue and green lines, you can't really say for certain that an uptrend is now strongly underway. But I'm in the accumulation mode. They want to take it down to under 1130. I'm going to buy more under there. Silver, similar situation. You know the story, down from $49 now all the way down to about $15. Momentum has turned higher, well oversold here. Even if you're a bear, it could bounce back up towards 17 or 18. But it's a real bargain down here, in my opinion, considering what's going on with again, Japan printing like crazy, Europe printing like crazy. The U.S. is on the verge of doing more, believe me, if need be. And the discussion regarding gold and silver, having its day and its worthless investment, believe me, is poppycock. We've seen so many cycles over the years, so you got to ignore all that stuff. Let's see. I think that pretty much covers the high points that I wanted to get into. There are a lot of individual stocks we could talk about, but bottom line is seasonally for the gold and silver, we're still in a period that's normally positive into February, and then after that you run into a theoretical seasonality correction phase. We'll see what we can do between now and then. My overall feeling is 2015 and more 2016 should be very positive for the metals, but let's see if we get some further confirmation. Personally, on any weakness, I'm buying gold and silver, physical gold and silver, and just adding it and accumulating the coins and taking advantage of these bargain prices. I remember when it was $49 and we thought it was going to 100, talking about silver, and here we're looking at it at 15, 16. You got to own some down here. I think there's a shortage of supply. I think what's going on the COMEX is a fraud. It's a bunch of paper being sold, depressing the market. I think in one day silver trades more contracts than physical delivery can provide in a year. So just a bunch of paper going back and forth, and if all those contracts being sold had to be delivered upon, it wouldn't happen. So you got to keep in mind that that's really the background of all this. Thank you for checking in. Mark Leibovit of Leibovit Gold Letter. Have happy holidays, and we'll speak to you early in 2015.